Hi, Ira. How are you?
Hi, Rebecca. I'm great. Thank you. Thank you for this
Good.
opportunity to get together and share some pointers on first-time home buying.
Yes, I have a lot of first-time home buyers who have a lot of questions. So I figured it'd be great to record it and then share it with as many of the buyers as I can.
Great. So, Rebecca, why don't you tell us about yourself and your office and who you're with and contact
Sure.
information?
Sure. I am with Keller Williams Jersey Shore, and I'm out of the Ocean City office, but I service Cape May, Atlantic, and a little bit of Cumberland County. So I'm on a local connect team, and we service pretty much a lot of the islands down the shore.
Great. And I'm Ira Bodesnstein. I'm a loan consultant at Loan Depot. I am currently licensed in New Jersey, Pennsylvania, New York, and Florida. Loan Depot is licensed in all 50 states. And if you're watching this recording and would like some information, I'm happy to connect you with another mortgage banker who can help you in a state that I am not licensed in. So.
Yeah, that's great. Yeah. So if on the same token, even though that's my service area, if somebody in another state other than New Jersey needs help, I can help find a realtor for them that can service their needs as well. So that's great.
Awesome.
All
Awesome.
right. So let me get into some questions here.
Sure.
All right. So the first question that some home buyers want to know is, what do they know to get started? Like, what are they going to need to know as a first-time home buyer to get a loan? A lot of them don't even know where to start.
That's a great question. So first thing you need to do is you need a plan. Not having a plan is planning to fail. So your plan should start out with, be realistic with yourself, work up a budget. How much do you feel you can afford? Think about what you're paying rent, realize that mortgage payment at the end of the day will probably be more than what you're paying in rent now. So hopefully that hits your affordability index. But if it's not, be realistic and let's try to work with what your affordability is. Second thing you need to do is you need to develop your team, really. And your team starts with a combination of choosing a realtor and getting a pre-approval letter, because if you don't know what you're qualified for, and maybe your affordability is under what you qualify for. I come across this a lot of times. People tell me they want to pay X, and I say, well, you really can qualify for more of a payment, and we try to work out a budget and guide them and advise them where to go. But pre-approval is definitely the first starting point.
Okay, great. Yeah, that's definitely a good place to go. I like how you mentioned, getting your team in place, because your lender is, like, I always tell people that's the first thing that you really need to do is know, we wouldn't want to go shop for a house and then end up they can't purchase it. So they
Right.
have to have their ducks in
and
a
and
row.
and you raise a great point, Rebecca. I don't know many realtors who will even show a house unless a client has a pre-approval letter, because you don't want to be wasting your time and your client's time
Mhm.
showing them properties that they can't afford and can't qualify for.
Exactly, exactly. All right, so thank you for that. And then we'll see, what other types of loans are there? So as a first-time home buyer, assume I know nothing at all. And then there are conventional VA, FHAs, USDAs, all these letters. Like, how do you break that down for a first-time home buyer?
Yeah, it's alphabet city. A lot of it is driven by what they have, what their qualifications are, what their credit score is, how much money do you have to work with, are you a veteran? VA loans are great tools. VA, if you're a veteran, thank you for your service. And government has provided 100% financing for veterans. So you don't need a down payment, which saves you money, but you still need to have monies for closing costs. FHA is another program that's very popular amongst first-time home buyers. in the sense that you can purchase with as little as 3.5% down payment. FHA would be my go-to product if your credit score is possibly under 700 is where I'd start bringing in FHA rates, because Fannie Mae and Freddie Mac have programs where you can purchase with as little as 3% down. Again, no matter what your down payment is, you still need monies for closing costs, but a lot of it is credit score driven. What is your credit score? If you're up over 740, that's fantastic. That's where you're going to get the best rates from conforming Fannie Mae and Freddie Mac. When you start dipping under 700, 680, and you're putting less than 20% down, that's where I'll bring in and compare FHA programs.
Okay, great. So now that we know what type of loans there are out there, what is some mistakes that first-time home buyers may make so they can avoid them when they first get approved until they get to closing?
And one of the things you want to avoid is, or you want to be upfront with your lender, the first thing you want to avoid is don't take on any new debt. Don't go out and buy a new car and now you have a new car loan, take a car lease without letting us know first. Because I have seen situations where now you have this large car payment and now you don't qualify because your monthly indebtedness just went up. Don't apply for any new credit cards. That's another thing you don't want to do. And just be upfront with your lender as to what you're doing. If you're going to change jobs, for example, you need to let us know. We will verify your employment just prior to you going to the closing table. So if you left your job 3 weeks ago and now you're unemployed, and I have had this happen, guess what? Now you don't qualify because you don't have a source of income. So just be upfront with your team, your lender, your realtor, if there's a job loss. There's nothing wrong with changing jobs. You can change jobs as long as you're employed when you close. You're going to be in great shape. But just be honest and upfront with what's going on, any changes in your life.
So I have a question about that. What about, you said no credit cards, but what about like getting new furniture, like extending credit at one of the furniture stores, like filling your house with all new furniture? That includes, right? Because it's a credit line.
Right. I would urge you not to do that until after you close on the house. Have it all lined up, have it ready to go. But I mean, most stores will give you instant credit. You know, you just apply on the spot and now you have credit and now you're ready to rock and roll. But
all right, sounds good. So let's see. How does the amount someone does put down affect their monthly mortgage payment?
great question. So obviously, the more you put down, the smaller the mortgage loan, the less your principal and interest payment will be. When you're putting down less than 20%, you have to have what's called private mortgage insurance. The private mortgage insurance monthly premiums vary with every 5% you're putting down. So if you're putting down less than 20, but up to 15%, that's where private mortgage insurance is the least. When you're putting down as little as 3% on a conventional loan, that's where the private mortgage insurance monthly premium is the greatest. FHA has mortgage insurance on all its loans. So it doesn't quite matter with FHA, but the only thing that will matter with FHA is if you're putting 10% or more down, the mortgage insurance does go away after about 11 years. Whereas if you're putting less than 10% down on an FHA loan, you're carrying this mortgage insurance premium for the life of the loan. Mortgage insurance does drop off automatically when your principal balance gets to 78% of the lesser of the appraised value or the purchase price. And the reason I word it that way is because if the house does not appraise out for the purchase price, that's what we're basing our equity position on, and thus your down payment. And there's also other alternatives to mortgage insurance where you may want to just fund and prepay the whole premium up front. That's something I'll discuss with the buyer borrower, and that's just personal preference. There's literally no right or wrong answer. There's just options and opportunities.
Okay. So how would my credit score or first time home buyer credit scores affect a loan? So you had mentioned that earlier, that the credit score may uh, affect it. So a very low score may affect the loan process. How?
Yes, start with FHA. FHA allows you to purchase with a score as low as 520. If you're under 580 but over 520, FHA does require 10% down as opposed to the 3.5% down. But if you're 580 or over, it doesn't matter if you're 580 or 880 and you're using an FHA loan, 3.5% down is the way to go. When you start getting into the conventional loans, they have what's called loan level pricing premiums. And as your credit score declines, again, and it also depends on the down payment. A 5% down payment is more affected by credit score than if you're putting 50% down. So it's a matrix that I no longer have access to the matrix as to how it impacts, but it can and it does. We try to just price out your loan based on your individual profile, and we can always run scenarios that what if your credit score was a little higher? What if your down payment was a little more? And that's where I'm happy to work and educate buyers as to where to go and what benefits them.
Okay, great. And what tips would you give somebody ready to get a loan other than what we've covered? Anything else that you can think of?
One thing you want to try to do is you want to try to collect your documentation. You want to keep handy your pay stubs, your W-2s, your bank statements for 2 months. And if you think you're going to need assistance, don't be afraid to ask family. Gift letters are very common where family will contribute to your purchase. Most first-time home buyers are on the younger side. So if you don't be afraid to ask your parents. What I've found over my career is that parents would rather see how you're going to use the money that they would be leaving you when they depart. So many times they're very willing and able to assist. So don't be afraid to do that.
Okay, that's great.
And
So
also
you mentioned
just ask questions. Just ask. If you're not sure, ask. And if you don't remember the answer, ask again. And sometimes we may be talking in mortgage lingo or real estate lingo, but stop us. Ask away.
Yeah, I always say that too. Ask as many questions as you need, which is why I think this is going to help a lot.
Yeah.
So another you touched on briefly was the job change. So if I'm changing jobs, what is important to know about that? Like if I have the opportunity to stay at my current job and I'm in the loan process, is it okay if I change, if I stay in the same career, or does changing careers altogether affect it if I still have a job?
The careers don't really matter if you're a salaried W-2 employee and you're going from company A to company B. Get a letter, an offer letter, so we can see what your new earnings is.
So if the earnings are the same, it would still be able to get a loan. They'd still be able to get a loan.
Sure. Just don't take a job where you're going to make less pay unless you have to.
Okay.
And,
Okay, great. So, what is different about, like, let me rephrase that. So, what should I look for in a lender? What should our first-time home buyers look for when they're looking for a lender?
you want to feel comfortable. You want to have a good conversation. Are they giving you accurate information? You have to hope so. Just know that it's not about the rate. I think too many first-time home buyers get hung up on what's the interest rate, because the interest rate today doesn't matter if you're just starting your home buying journey. The only time interest rates really matter is when you have a property under contract and you're ready to move forward with an application. But when you're getting an interest rate quote, make sure you ask, what is the APR? The APR is what compares one lender to another, because the APR has the true cost of funds built in. So understand, feel comfortable, make sure the person you're dealing with is also going to follow you from beginning to end and not just getting compensated to originate loans. There's lenders out there who, when you're talking to someone, they just want to push loans into process. They don't care if you get approved. They don't care if you close, because it doesn't affect their compensation. Someone like myself, I follow you from beginning to end, and people call me even after closing. If there's an issue with servicing, they'll reach out to me. So feel comfortable and ask a lot of questions.
That's great. Yeah, that's great. Okay, so let's see. You pretty much covered what you would ask. Well, you can go over like what would they ask a lender? So what to look for in a lender, but what questions should they ask you specifically?
You want to ask, are you a direct lender? Does your team process the loans? Does your team underwrite the loan? Or are you sending these out to a third-party provider? People often ask about the loan being serviced. Do you service the loan, or is my loan servicing going to get sold to someone else? That's really not as an important question as people may think, but it is a commonly asked question. And you may want to ask, how long have you been in this business? How long have you been doing this? And nowadays with the internet, don't be afraid to Google the person you're speaking with. Find out if they have reviews on Google, on Zillow. What have other people thought of their individual experience? But nowadays the internet reveals a lot about us.
Yeah, we're everywhere, right? Everyone's
Yes,
everywhere.
Absolutely, yes.
Okay, so if the buyers have more questions to ask you, how can they reach you?
They can either call me. You can call me on my cell phone number, 973-219-4167. You can also feel free to shoot me off an email. My email address is my first initial I, my last name Bodesnstein, Bodenstein, at loandepot.com, loandepot.com.
That's great. And for me, if anybody needs to reach me, my cell phone number is 609-604-6153. And by email, it's Rebecca, REBECCA, Homes, HOMES, 365@gmail.com. Like Rebecca sells homes 365 days a year. So it should be pretty easy to get to know. Thank you so much for helping answer some questions. And definitely would like to have you on a live Zoom as well in the future.
Thank you, Rebecca. My pleasure. It was a pleasure to do this with you.
Thanks. Did you have any other questions or anything for me?
I don't have any other questions of you, but
Okay.
thank you. And
You're
thank you very
welcome.
much.
You're welcome. Bye.